Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. The top headlines. Indian markets trade flat with the Nifty holding about 10,800. Small caps outperform. India wicks advances. And open interest surges in ICICI Prudentials as traders take fresh long positions there. And the pharma index gains for the 8th straight day, keeping up with the longest winning streak since October 2017. And Vakrangi hits a lower circuit after the company changes its capital allocation policy, says will spend on ATM capex before deciding on the proposed buyback.
Okay, those are the top headlines at this hour, but let's also tell you what's happening with the markets today. After a week closing yesterday, we're looking at a very flat start for the frontline indices. Nifty is still actually now trading in the positive territory, which means it's off the opening lows at least. So that's one good news. Bank Nifty is just down by about 31 points. Remember, both these indices are trading above all their key moving averages so far. So 20, 50, 100, 200-day moving average. Nothing to worry there. Let's also look at what the broader markets are doing. Yesterday there was a bit of outperformance seen from the broader markets, and that continues right now as well. Mid cap as well as small cap index are up between 2/10 or 0.3%. India volatility index, which has been witnessing some bit of correction in the past few sessions, has seen a bit of uptick today, but I think the level around between 12 to 12.5 is still very comforting for the bulls. At least a lot of derivatives analysts watch out for that mark of 12.5. In terms of sectoral indices, as Agam highlighted in the headlines, you've got the Nifty Pharma Index. That continues to be the top sectoral gainer as we speak, whereas some bit of losses definitely seen for the Nifty FMCG Index, which basically means there is some profit booking taking place there. In terms of option strike, what's happening today, the 10,800, watch out for the 10,800 mark, whether we close above that or below that, and even the call and the put strike of 10,800 are very active as we speak. So that's the 10,800 call that's already added nearly 4.3 lakh shares as we speak. And let's just pull up the 10,800 put strike. Okay, that's there on your screen. That too has added nearly 3 lakh shares. So the fight between the bulls and the bears will be between this mark of 10,800. Finally, the institutions, what are they doing? Yesterday, we did witness some bit of fresh shorts being built up, or rather fresh contracts on the short side on index futures, and they continue to be net short on index futures for the series. If you look at this, almost 9,500 contracts were added, and now the total positioning on the long side has actually fallen from that 43-44% that we were seeing. It's fallen below the mark of 40, currently at about 39%, Agam.
Well, in terms of stock futures, is ICICI Prudential where this stands out. We're seeing some strength, but in a substantial increase in open interest. And Tata Elxsi is the other stock which is up and about, continuing to move up. Of course, United Spirits is going through a corporate action. That's where the stock split comes into play right now, and that's the reason why you're looking at that 400% increase in open interest. But we're going to have to get that number adjusted. But Ajanta Pharma and Dr. Reddy's among the others are looking at fresh longs, so not too much to speak for. Tata Elxsi continues to remain in focus along with the pharmaceutical pack, Navneet.
Okay, and we'll get some views going from our derivatives analyst on the show on individual stock futures. But before we get them on the show, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. You can also write to us on our social media platforms, Twitter, Facebook, with #AskPQ hashtag. Okay, let's bring in our experts then. We've got Thakkar of Anand Rathi as well as Navneet Daga of IIFL Wealth are here with us. Good morning to both of you gentlemen, and I appreciate you joining us once again on the F&O Show of Bloomberg Quint. Let me come to you first. A flat start, not what SGX Nifty was actually indicating. We've managed to once again cross the 10,800 mark, but too early to say whether we can sustain it or not. What are the data points that you're closely watching out for in terms of Nifty levels?
Hi, good morning to you, Navneet. As you rightly pointed out that Nifty is still trading that within that range of 10,900, 930 broadly to 10,700 to 550 broadly. So the consolidation continues, the stock specific activity continues. If you remember in your last show, last Friday, or before that I said that pharma index has bottom, and that can be the flavor of the month or the quarter of the entire year, I would say, and that is what has turned out as anticipated, and I think that would continue to do so, because stock specific, sector specific rotation will continue to happen, but a single sector cannot drag the Nifty or take the Nifty towards the levels of new highs. So it has to be a overall participation which is lacking right now. So as you know that everyone is just covering FABA these days now, wherein 15 days back no one was talking about it. So the only thing is that there's nothing else there to talk about, right? So else there to discuss about. The only thing is that till we don't see a participation or a move coming in the banking space, which has a major contribution to the index, I think that this consolidation would continue, and for Bank Nifty to have that kind of a breakout to confirm that the trend going ahead is absolutely bullish, it really needs to take off those highs of 27,000. For the medium term breakout, I'm saying. For the short term, we can see a buy about 26,600, about 26,600. We can see 26,800. One can place a stop loss of 26,490. So that's a call on Bank Nifty. As far as Nifty is concerned, I think one can buy right now, because with the help of these other one or two sectors, we can see Nifty again, inching towards the upper end of the range and coming to 10,890. So one can buy that as well. So that's a call on Nifty.
Okay. Navneet, good morning to you as well. How about you? Are you expecting some kind of a consolidation, or are you expecting a move upwards or downwards?
Hi, good morning. Look, there is no major data point that I can that gives me a comfort in saying that we are in a breakout or breakdown kind of a trade. The VIX is trading almost at 12 odd levels. No major events as so. Some of the heavyweights in index stocks are in a very fine shape, led by Reliance, and what is happening with some of the heavyweight counters like Maruti. They're again trading near to 9,000 odd levels. So this gives me a comfort zone in saying that the index would be in a very sideways range, and this is how the participants are playing on. We've seen across the board build up happening on the lower side, on the put side as well. 10,700 holding the max OI, suggesting me that the range bound trade might continue on overall in the index, but within that index, a lot of activity has been visible on the sideline counters like pharma, like some of the select heavyweights in terms of private banks as well. We have seen some kind of downward pressure happening on them. So, to my understanding, the overall setup suggests that at least for the next this expiry, moving into the fag end of the expiry towards the next week of rollovers, we believe that there would be a sideways trend to continue, and that range option selling would still be a very fruitful opportunity. We have been suggesting that for last 3-4 weeks, and now basically what we are seeing is basically the IVs are cooled up in an HDFC Bank. The Bank Nifty has also gone very sideways, and that is making the index also going sideways. Larger participation is coming from the other stocks. But however, unless we see major participation coming back from the banks, I believe that the index might remain sideways and the sideways trend.
Okay, that's the view coming in on Nifty and Bank Nifty, but how to play both these indices via options? Let's shift our focus to the options corner then. Navneet Daga has a short strangle strategy for Bank Nifty for the day, but before we proceed, let's first take a look as to what that strategy exactly means. Well, a short strangle is when one sells an out-of-the-money call and an out-of-the-money put in anticipation of decrease in volatility. The strategy will become profitable when volatility decreases, followed by contraction in option premium. Navneet, coming back to you, short strangle for June 21st Bank Nifty, and you've been giving an option strategy on Bank Nifty for a while now.
Look, that's where the consolidation has been visible. If you look out at the start of a month when there was a lot of news flow driven movement in HDFC Bank because of FPL limits, the IVs on HDFC Bank were trading at almost at that level of 23 to 24. It has collapsed down to almost 12 odd levels on HDFC Bank, which gives me in comfort in saying that HDFC Bank having an almost weight of 40% on Bank Nifty, there's a chances that the Bank Nifty also goes sideways, and which is what has been visible in the screen. So to my understanding, selling in options in a sideways market is always fruitful unless we have got any major news flows. So one need to trade with a strict stop losses. One can sell at 26,000 put options on the lower end and simultaneously sell a 27,000 call option on the higher end of 21st June. The current premium that we're getting around in the range of almost 80 to 85 points, and I believe that we'll be able to get almost entire premium in this pocket going forward in this next week, because I don't see any major news flow which can take the market higher or lower in a major direction. One need to keep a strict stop loss, however, at the levels of almost 120 on the spread. If we happen to if the spread widens towards 130 should be kept as a very strict stop loss. If the premium happens to widen towards that level, one need to exit the strategy. And 27,000 levels is what we are watching on the higher side as a key resistance zone. Until unless that has been taken out, I believe that the sideways range may continue with a mild sideways bias.
Okay, so Navneet has a short strangle on the Bank Nifty, but Jay, you have spoken about being relatively long when it comes to the Nifty and the Bank Nifty. How would you employ it on futures, and if at all any options play as well, if you could tell us about that?
Sure, see, futures play, as I said that, I have a buy call on Nifty targeting around 10,890. One can buy this with a stop loss of 10,770. I would not like to actually initiate any option strategies as of now, keeping in mind, weekend, as well as, would like to see what happens and how it starts on Monday again, and would like to, create some fresh option strategies out there. I understand that, if the Monday and Tuesday the market remains sideways as it is for this week, then there is a good play coming in options on the short side. But then I'm not anticipating that sideways movement coming in the next week, because next week I believe that there is going to be a breakout kind of a move coming into the market. So either upside or downside, we are going to see that. There are a few data points which we read, and based on that we feel that next week is a breakout week in the market, and based on that we would like to initiate a fresh momentum based trend based option strategy, rather than going focusing on the sideways. And since I'm long on the index, then you can infer from it that yes, the breakout chances are there quite likely on the upside.
Okay, so we'll wait and watch whether there is any sort of breakout next week or not. But let's get you some individual stock futures ideas also going for the day. Navneet, what are you betting on?
Look, as we discussed in the start of our conversation, that the pharma index has been on a tear on the upside, and there are some selected individual pockets still merits to be on the long side. One stock which caught my eye was Star, basically Stride Shashan's. The stock has formed a good base on the lower side of 350 odd zone. It's tried to eke out the gains on the higher side. Would be comfortable still be trading long on that. I was looking at the options data, and the 400 call strike price have got on the highest open interest within trading, and almost it's very expensive in terms of options implied vols. I was looking at almost trading at 80, 81 implied vols, which is a quite expensive one. It's suggesting that there would be a two-way movement, but however, on the lower side now, the comfort zone is saying that 350 or 350 to 355 range has become a comfortable support zone for the stock. So to my understanding, one can still be long on that stock with a target price of 410 on the upside and 355 on the lower side as a stop loss level. The second stock on my list is basically being on the short side. The likes of BEML and BEL, both of them we have been quite short and from long now. I've been advocating the stocks from the higher levels, and still believe that there is more downside on both of them. So one can look at to short BEL in the current market price of somewhere to 117 to 150. To my understanding, one can keep a strict stop loss of 121 on the higher side and still trade on the short side bias with a target of 110.
Okay, and Jay, I believe you have 3 ideas for us today.
Yes, the first is a buy recommendation on a Glenmark. See, pharma, as you know, have been continuously bullish right from the low levels, and we anticipated right the bottom at the right time. Hence, we continue to see this momentum actually continuing on the upside till the levels of 10,250 and thereafter maybe 10,600. That's on the Nifty Pharma Index, and it's still quite far from those levels. And as of now, as far as the risk reward is placed, Glenmark is absolutely bullish. I believe that from a risk reward point of view, because see, 3 stocks wherein I was absolutely bullish was Sun Pharma, Glenmark and Lupin. Wherein Glenmark and Sun Pharma has actually gone up quite a lot, but then Lupin and Sun Pharma has gone up quite a lot, but Glenmark saw some deep correction till yesterday, and thereafter it managed to recover. Hence, I think that the chart pattern and everything is same. It's just that it saw sharp profit booking, and now the stock has reversed and again moving higher. So I think that Glenmark can see the levels of almost 630 on the upside. I had mentioned a stop loss of 575. At that time, the Glenmark was trading at around 590 and has gone up to 600. So I think that one can trade stop losses to 585 in order to have a better risk rate of 1:2. The second buy recommendation I have is on a Kotak Bank, because I believe that, as I said, it's the Bank Nifty which can provide that kind of a support for a breakout on the upside on Nifty. And I think among private sector banks, Kotak Bank, which has been consolidating since a couple of trading sessions now, is likely to provide a breakout on the upside. Hence, that becomes a buy. Target on Kotak Bank is 1355. One can buy this with a stop loss of 1310. And a final buy recommendation is on Bharat Finance. IndusInd Bank is doing good among the private sector bank, and Bharat Finance definitely has to follow that. And it too has provided a good breakout from a consolidation. I believe that on the call front, one can buy Bharat Finance call option of almost 1200, and one can target the levels of almost 25 on the upside. One can buy this with a stop loss of 9.
Okay, so those are a couple of strategies on stocks coming in for the day. But since both our experts have pharma stocks featuring in their list, let's just pull up Apollo Hospitals, which has gone up nearly 4% in trade in today's trading session. Let's check if there is any sort of build up on the long side that has been seen for the futures. So the futures are actually trading at a discount, no major build up. The open interest is up nearly 1% or 1.5%. Navneet, if I could come to you for Apollo Hospital on the charts, it's seen good gains, at least in the opening session today. Can one take any position here?
Look, it is coming out of a kind of a bear market, and it's just giving us signs that somewhat stability might be coming in once it started to trade above in the levels of above 1,000. So to my understanding, the risk rewards are still been favorable, but it would be very difficult, because normally I don't see any major actions on the option side on this stock, and somewhat the action is also visible even if you look at the 1,000 stock strike price call options. Somewhat the volume buildup is also there, and seen some kind of an attraction in terms of the gains as well. So to my understanding, one can still be long on that stock and keep a strict stop loss on the lower side if one can maintain a stop loss of 980. To my understanding, that the stock can see some kind of a more upside traction towards the level of 1080, but somewhat looks likely the upside would be capped near to that range.
Navneet, just coming back on Apollo Hospital, actually we've also got a query coming in from Shravan Kumar, who's written to us on Facebook. I think he's already taken an intraday long position. He's suggesting at 974.6, and he's making money there, obviously, that we can see on the screen. He wants to know if he should hold from here for more gains, or he should look to book profits at current levels.
So the way the chart pattern suggesting that it's looking likely that somewhat more gains might be added in during the day. I'll say that just trail your stop loss to 1,000 levels for the day, and look to book your profit in that range if it started to break below that level, and keep a hold onto the stock. And to my understanding, that can for the day also it can see a somewhat a more spike on the higher side of 1,035 levels.
Okay, well, there you have, that's the view on Apollo Hospitals. On WhatsApp, we have Mahesh from Hyderabad, who's asking, and actually he's actually saying that he has shorted and sold the Bajaj Finance futures at current market price. His question is, should I continue? Can we take a look at the Bajaj Finance futures currently and see where they're trading at? We have seen a lot of strength return to Bajaj Finance, now well over the mark of, 2,265. And there is a surge in open interest towards fresh longs. It's up as much as 1%. That's as far as underlying goes. Jay, what's your call on Bajaj Finance? And would you recommend Mahesh continue to hold his position because he's sold the futures?
I rarely give a sell call on Bajaj Finance, because this stock is, as you know, the stock which is falling. Actually, one says that it's a perpetual sell, right? And we have that term in the market for stocks like RCom or maybe JP Associate or something like that. Now, this is one stock which has been trending higher since many years, and it's never shown that kind of a reversal. You sell some short not in anticipation of profit booking. You sell a stock in anticipation that this stock is going to go into bear market. Whenever you short. That has to be the point of view, even though if you are trading for 20 bucks. Yeah, the strategy should be, because why? Because you are selling the weakness. and the probability of winning increases. So this is for all the viewers. I would like to say, using your medium, is that always whenever you want to short, never short for profit booking. Always go short whenever the market is reversing from up to down only on the weaker stocks, and this is not a weaker stock, and it might be a top, I don't know, after having rallied so much. But then till you don't have enough of evidence, I think there is no reason for one to go short, because we work on data, we work on technicals, and all of this is based on the data availability. And as of now, whatever data is there, it's all pointing that there is still a lot of strength left in Bajaj Finance. There is no sign of reversal. So I would say exit as soon as possible, and always go short only on those weaker names wherein the probability of bounce back, even if Nifty bounces back by 200, is very less.
Okay, so Jay is of the view, if you've taken a short position on Bajaj Finance, exit from there. All right, let's move on and take some more queries for the day. We've got Mr. P.S. Krishnan, who is called us from Chennai. Hi, Mr. Krishnan, good morning to you, and thanks a lot for calling us again. Tell us what's your query on.
Sure, thanks for taking my call. I have queries on two specific stocks. I'd like to check whether it's a good level to get into India Cement's July futures as well as HDFC Bank July futures at current levels.
Okay, I'll take your query to Navneet. Navneet, HDFC Bank and India Cement. I think India Cement was weak in yesterday's trade. It was down nearly 3%. He's asking if these are good levels if one were to take a long position for the July futures of both.
Look, firstly on HDFC Bank, the way I was explaining that basically if I look out at the start of a month, because of the sort of a lot of news flow around it regarding FPI limits getting open, the walls were trading almost at the levels of 23 to 24, which is fair above its historical walls level. The walls have collapsed almost to the levels of 12 to 13 at that the money options, and it's looking likely that consolidation would be there. Now the entry point in the range of 2000 levels seems to be a very good entry point to me. So towards another 1.5% more downside from here on is still possible. That's where it's likely to adjust for the series. And if we are getting to the prices, getting into the July futures would make a lot of sense. So overall, the trajectory for the stock is up, and suggesting that the higher levels will still be possible with the levels of 1018 to 2080 levels, the 2100 levels will still be possible for the next series. But to my understanding, the entry level should be in the range of 2000 levels. The second query was regarding India Cement. However, the stock has seen, the overall cement pack has seen a short build-up and continuation. We are getting the dead cat bounces in the middle of the series. But I'm not very convinced that the stocks are holding on the higher side. We have seen India Cement almost eking out gains towards 120 to 121, but hardly been able to hold on to that levels. So to my understanding, it's the stock is not showing major momentum on the upside. It's a kind of an avoid at this point of time, and wait for a decent levels for on the lower side of at least at levels of 105 odd levels to entry on the stock.
Okay. Well, moving on to the next query, we have Nikhil Raja on Facebook, and he has a query on ONGC. Before I read out his query, can we take a look at where the ONGC futures are currently trading at? It's at around 167.25. There has been a slight decline today's day of trade in this underlying, down at around 167.2, and open interest, very little change there. Nikhil Raja has sold ONGC futures at 168. So it's largely around the same levels, and his question is what levels should he be keeping an eye on? And there is a follow-on question to that, whether or not there can be any call options that can be sold when it comes to ONGC. So Jay, I'm going to take this question up with you. What's your view on ONGC right now? And the levels that you should be keeping an eye on, whether or not he should continue to hold his short position on ONGC futures, and if there are any call options that can also be sold here.
Well, I think yes. See, ONGC is now one stock wherein we have seen this stock, facing a good amount of resistance on the upside. This is one stock which is into a downtrend, into a bear phase, and yes, on the upside, till the levels of say 176 is not taken off, on a closing basis, the overall trend is going to remain down for the short term. And for the medium term, the reversal is quite high. It's about 182. So overall, the trend for this stock is down. It's been heading down in a downward sloping parallel channel, and I think it's now heading towards the levels on the immediate basis, towards the levels of 160, and thereafter, its previous lows of 155. And if someone wants to sell the call options, then I think, on the upside, as far as the ONGC is concerned, very nicely, good amount of writing happening at the higher side, and also, if you see the data, then I think 175 for me, I think is a good level for the call option to get sold into, and I think 1.35, 1.45 wherein it is trading right now, and as I said, 176, 177 is a resistance as well. So till those levels are not taken off, I think shorting that call is a good strategy. So one can sell 175 call option at 1.35.
Okay, that's the view on ONGC, and we're getting a lot of your queries on stock options. Our next query on Facebook is from Newton. Newton's got Power Grid 200 call strike at a premium of 2.4, and the second query is in Capital First, where Newton's holding 600 call strike after paying a premium of 12.2. He wants to know whether the positions can be held for the next two trading sessions. Navneet, let's address one query at a time. Power Grid 200 call for which paid a premium of 2.4. What would you advise?
I'd advise exit at the current market price as well. The stock is not showing any major great traction. We are moving into the fag end of the expiry. That is, we are moving in the last 10 days of expiry. The theta decay would be quite far, and quite possible that it might be quite fast theta decay. So the stock which is not showing major trend on the upside and you're holding on the call options would not be a prudent strategy to hold on to it. Still, you're getting a premium of almost 2 odd points. So one need to still be an exit, because I'm not very convinced about the stock closing about 200 levels and giving you a decent amount of profit. It's very unlikely to that.
So the advice in Power Grid is you should exit from your position that you've taken on 200 call. Navneet, the other one is in Capital First. It's a 600 call strike for which almost 12.2 rupees premium has been paid, and the current premium is somewhere about 11.2. What's the advice on this one? 11.9 actually, it's just about the same.
Capital First, I would say just hold on to it. The stock, both IDFC Bank and Capital First, after the merger, they have been moving swiftly higher. Once they got on a merchant load, there's some lot of accumulation of longs has been also been visible from the lower side. So the stock has turned almost from 530 odd levels to almost 590 levels in current market price, 593 to be more precise. To my understanding, there's a greater chances that we might continue to see an upside traction. The momentum has not died down yet. To my understanding, there's a great chances that we might eke out gain from here on as well towards a level of 620. So I'll advise one gentleman to keep on hold on to it. However, just because it's a call option, then there would be a lot of theta decay. But if the stock started to close below 580 levels during the this week or so, one need to keep exit out of it, because once we seen that levels, there are greater chances that the theta decay would lead to a depreciation in the call option prices, and the exit would be very difficult in that case. So on the futures level, one can monitor 580 as a trail stop loss level.
Okay, and I think we have time for just one more query, and that is with respect to the pharma sector. And as Jay has been discussing it quite comprehensively, Jay, the question on Facebook comes from Venkat. His question is actually quite simple. What's the impact of the pharma rally on a stock like Biocon? So, well, can you pull out Biocon and see where the futures are currently trading at and what's the kind of traction it's seeing? At around 625, Biocon's underlying is at around 1.65. Open interest very little change at a premium of 1 point. Jay, what's your view on Biocon and the impact of the pharma rally? Do you think it can carry Biocon higher as well, along with the rest of the stocks?
Absolutely, there is no doubt about it, and Biocon is a good fundamental stock, I would say. As a disclaimer, we already have a buy recommendation on it. Recently, we saw huge cut coming in Biocon right from the levels of 680, 700 approximately to the levels of 575 on the low side on a single day. 100 or more than points fall happening on the intraday day. But then I think, overall, pharma has been doing good, and Biocon because of that kind of a sell-off which was seen, post that we saw a pharma rally actually coming in, and Biocon did participate in it. But then see, Biocon has been in on already uptrend, so it had remained immune from this pharma sell-off, okay, which or a pharma bear market for almost 3 years, which continued for that much time, and Biocon was in fact performing high tops and high bottoms. So it has got nothing to do with that, if you say for a direct correlation. But then overall sentiment is positive, and the stock itself is very good. So I think with a stop loss of 575, one can continue to hold on Biocon. The target would be definitely fresh highs.
Okay, expecting fresh highs on Biocon. That's Jay's view on that particular counter. But with that, we've run out of time. So I'm going to thank both our experts, Jay and Navneet, for joining us and taking us through their views and solving some of our queries. And with that, it's a wrap on this edition of the F&O Show. Lots more lined up, so stay tuned in Bloomberg.